Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on August 11th. My name is Ian Saunders. I'm joined as well again in person this time by David Clark, and then for the first time, Trevor. It's good to have you in here.
Thank you for having me. It's a pleasure.
Trevor was our intern here for the summer, being it's last week. We figured we'd get him in front of the camera, just to send him off in the sunset with a good memory there. So hopefully it should be good. Before we dive into some of that conversation, though. I think it is important to come in and take a look at some of the market movement we've seen over the course of the past week. In looking at movement for the S&P 500, we're saying, trailing 7 days, the S&P down 1%. Headlines would probably lead you to believe that was a little bit worse than it was.
And it actually was, for sure.
Right. We're still looking at a default chart of the S&P 500 that's on 6 consecutive buy signals. You're definitively in a positive trend, breaking back through to new, at least new 52-week highs during the months of June and July. There ticked up to that 4,600 chart level and then pulled back from overbought territory. All things considered, it's a pretty healthy looking chart, David.
Well, and in many cases, when we got calls this week or early this week about, the indexes are falling, U.S. stocks are falling, and looking at that wide variety of indexes, right now, it's only the Nasdaq indices and the Russell 2000 that you've seen give a sell signal. But even then, it's in the confines of a strong uptrend. One of the old adages that if anyone who's followed point and figure for years is typically that first sell signal in a really strong uptrend is false. So would that type of sell signal on the chart of the Russell and even the Nasdaq Composite Index really worry us at this point? Not quite, because really we've seen all of those indices pull back right to the middle of the trading band, much like other U.S. equity indexes, exhibiting that really we're finally getting that exhale that it feels like we've been waiting for the past 3 or 4 weeks, honestly. So I think this is maybe what folks were waiting for in terms to try and look to add exposure. But when it finally happened, it sort of was, well, wait, is this rally going to still have enough left? And technically speaking, right now, we have no reason to think that the rally is ending by any means. We're still considering this just that healthy consolidation pullback to normal levels, where now we would honestly say some of these charts have normalized in many ways, rather than being extended, which was the conversation for the past month.
Right. And you're looking at a lot of these areas. You talk about it, a lot of these, especially tech heavy, the semiconductor areas got so extended throughout a lot of that rally, kind of pull back. We've also seen volatility kind of pull back a little bit too. I know one of the indicators we pulled up last week, or one of the indexes we looked at the 1 point chart of the VIX, which we'll put up again on the screen for those that are following on YouTube. The VIX had given 3 consecutive sell signals on a 1 point chart, really definitive negative trend that you can see on that chart really since March of this year. Bounced up a little bit, gave a buy signal on that chart, got to the 18 level, touched that bearish resistance line and turned right back around and swung lower with movement this morning. So I think that's another thing too, is that you're not seeing the massive spikes in the VIX. You're seeing, it's been really consistent movement. We saw consistent movement for the past several months up to the upside, and now a little bit of kind of just consistent movement lower. You look at the like a 10-day chart, just stair stepping each day, right? Which is, healthy, good thing to see.
Well, in many cases, when we're going outside of just looking at those index charts and looking at indicators, you still see many of these indicators, whether it's the bullish percent for the S&P 500 or a variety of other BPs, and even other indicators like the PTs and the RSNXs, measuring those trending and relative standpoints. They're still at elevated levels. Most are still north of 50%, suggesting that over half of the universes are still with their stocks trading on either point and figure buy signals for bullish percents. I know for the case for the BP SPX is sitting at about 68% right now. So really roughly 2 out of every 3 stocks within the S&P right now still sits on a buy signal. So still seeing high participation. Again, all of this really builds that story of this is healthy. This is a healthy pullback as far as we're still considering right now. Any further downward movement on these indicators and indexes might change our tune a little bit, but for the moment, we're seeing a lot of those support levels remain intact. Trends remain. We're even seeing in some cases the relative strength picture for some stocks continue to improve. So that's worth noting. And even areas that, this week, I know we'll mention here in a little bit, some energy financials, those downtrodden areas have had a nice little pickup here recently. And we'll get back to that here in a little bit.
Yeah,
sure.
Absolutely. I know Trevor, you in particular kind of brought up that chart when we were just talking about what we were going to talk about before jumping in. But before, I guess we maybe let you look at some different areas or see what areas are important. Why don't you tell us a little bit about yourself, kind of who you are, where you came from, how you got to be an intern here, and kind of what you've been doing.
Sure. So my name is Trevor Plesko. I am a finance student at Christopher Newport University, and this upcoming year I'll be a senior. I had the pleasure to be kind of a research intern here at Dorsey, Wright this past summer, kind of helping out more the equity research side, assisting with articles. Obviously, we have a plethora of different models here, and so I've been doing some back testing on those, maybe tweaking what we can do for some improvements, because that's always in our sites, and just kind of doing some back ends, kind of data organization, make sure this place is running as smoothly as we can.
Yeah, no, it's been great. You've been great on the data side too. I know that that's not necessarily a really favorite thing to do, but it's when your machine starts smoking over there, if you're trying to run so many Excel formulas, you know that you're putting in a lot of good work. When Trevor, you're relatively newer to technical analysis generally, right? Before kind of coming over to the Dorsey Wright side, kind of like, what are your thoughts of it after? Like, would you find it being kind of helpful now, or like how do you see it kind of fitting into the way you're looking at stocks?
I coming from before this, I was a very little technical analysis background, and so it's been interesting kind of getting that other aspect of analysis that I can incorporate with kind of the fundamental side. I think the analogy we always use here is playing the piano with both hands. How
We got him to drink the Kool-Aid. We got the lingo down.
I mean, it's at its very worst, it's just an incredibly helpful tool for when to enter and exit positions. And when you kind of look at those levels of support and resistance, as well as the overall relative strength, it really can strengthen your overall analysis of different securities. And so personally, I think it's been a huge addition to my kind of research skills as an analyst. And so it's been a huge help overall.
So the past 10 weeks wasn't for nothing. Right?
Yeah.
Yeah. No, you've been a great help for us, certainly. And so, I mean, when you're looking at the research platform, I mean, our research platform has a lot of different kind of like aspects to it, right? I know Dave and I each have our particular kind of set of indicators we like going to. So maybe let's kind of dive into some of that. Like, what would you do when you're coming to the platform as like a relatively newer user, at least compared to David and myself? Like, what areas did you feel were cool to look at or helpful?
I think definitely for getting a broader macro level view of kind of what's going on in the market right now. So looking at some of those asset class indicators, whether it be Dolly or some of those group scores, super helpful for getting a better picture of what's going on with the different sectors and asset classes. Yeah. So just looking at recently we had domestic equities overtake international equities, and so just kind of getting a better picture through some of those metrics of what's going on with different asset classes helps definitely just with asset allocation and just understanding the broader movements going on. And then from a more focused lens, it definitely helps using the security selection tool if I'm trying to find certain pockets of the overall market to target, whether that be filtering through our technical attribute scores or with the overbought, oversold levels, or if I want to look at certain consecutive buy or sell signals. Overall, I think combining those two aspects of getting a better idea of the overall broader kind of macro environment, and then using that to then kind of narrow the search using some of the additional tools on the website, I think is kind of how I've been approaching after my time here. So
yeah, no, and you've been we've kind of had some back and forth different aspects of like the written research and whatnot, or just kind of tracking different areas that you've been suggesting that might be good areas to look at over the past few weeks. Make some solid names to consider there. So I know that there's a quick learner there on the security screener side. David, I know that you mentioned the Dolly deal there. You tend to look a little more at the group scores side of things, at least on Thursdays, right?
At least on Thursdays, yeah. And even this week, I stay involved with group scores and Dolly and very deep manner. So
Yeah.
I got to spend a little time with Trevor on teaching him the inner workings of the two and sort of behind the scenes. And it is interesting as you sort of talked about, coming out of school and getting into sort of more the real world application or real world aspects of it. And I think, all three of us have interned here. You and I were started out here as interns, so we still remember. But man, it was, and it's eye-opening. It truly is.
Technical analysis isn't something typically, at least, I mean, in my educational experience, a lot of people don't want to teach about a lot of the technical analysis aspects, right? There's maybe one technical analysis class, right? I mean, and that's kind of the gist of a lot of the education. So it's different application for sure, but I mean, we find it to be pretty helpful.
Yeah, I mean, on the flip side, it's definitely a huge differentiator from other like if you're looking at different analysts and you see one as technical analysis kind of in their portfolio or repertoire, I mean, that's a huge help.
Right.
So, I mean, it's kind of a double-edged sword where, yeah, it's not there just yet, but getting ahead of the curve and getting in is certainly tremendously beneficial.
It's not as much of a black mark as it used to be, I would say, across the broader space too. I mean, it's a lot more, it's easier to see, and I mean, as the environment becomes like kind of digitized and a lot of different places to look at, it's a lot easier for people to get access to it and see its usefulness. Yeah. But maybe in diving into some of the different areas that we're looking at, Trevor, I know you were bringing up before, you were saying there's some pretty interesting movement in crude oil recently.
Yeah, so if you look at our continuous crude index, for
which is what ticker?
CL /. And recently it's kind of been stuck at that $83 level. And just yesterday, it broke through and finally got to that 84 level with no more resistance until you get to that $90 level. So could potentially see another rise.
Yeah, well, and at this point, it's something that where we finally seen that rally above 84, like you said, there's not much resistance until 90. You've even seen it in some aspects looking on the energy equity side that it rallied up above the current sort of resistance level for it. In that particular case, like XLE, it stayed there. It had been in place since about February. So you're seeing these rallies out of these energy names, and it's kind of helped out in some aspects, the small cap space. It's kind of given it some resiliency here recently, which has been interesting. But I also think financials has been a part of that conversation for sure. Even looking, we mentioned group scores earlier, and I was looking at it today. Group scores had financials moving back above that 3-score level for the first time last week, really since early part of this year. And we're starting to see banks further improve as it's got the top score direction out of any group or any sector, at least, on the asset class group scores page right now. So seeing some of those areas like energy, like financials that, a month ago, we were looking at lower part of our rankings, weren't really given much attention to. They'd maybe given a buy signal or two, had to come off of really significant type of move above resistance. Now we've gotten it. Now we're getting that rally. And in many cases, what helps here this time is we've seen crude rally to this $83 level on 3 prior occasions, unable to break through it. And while it presented some trading opportunities, generally speaking, you would have likely avoided that sideways action within crude and a lot of energy equities. But we're now getting to the extent that it's breaking out, seeing those rallies above resistance, but we are a little on the extended side. Not even so much extended in terms of on the chart, but we're extended into overbought territory right now. So ideally, we would like to sort of see prices for crude remain kind of here in the low 80s for a little bit before potentially moving higher. It would give it some time to really kind of move into normal prices, if you will, and potentially help investors in terms of dipping their toes back into it and possibly seeking to get exposure. So right now we would hit pause on looking to add to some of those maybe broad energy, broad financials exposure, even though there's been quite a bit of improvement, especially in the past 2 weeks, would still hit pause for the time being.
Yeah, I mean, it's been consistent improvement. I mean, that chart of crude oil is what you're looking at 4 consecutive buy signals. But like you said, David, I mean, your weekly oversold reading through movement yesterday, that's not including the 1.5% move, at least at the time that's recorded on Thursday, you're 90% overbought, right? So probably an area that you want to kind of maybe wait for some kind of a pullback and normalization there in the trading band. Broader energy stocks kind of story is the same, right? I mean, you're seeing that movement like XLE, like you said, but we're seeing, I think another important point you touched on is that, we're seeing some areas of the market have moved lower, pulled back, like we hit on at the beginning of the podcast, right? But you're seeing some sell signals be given on these charts. But you look like the BP NYSE hasn't reversed down into O's even. You look at any of the positive trend, those PT charts, all of them, with PT NYSE ticked higher yesterday. You're looking at those that are continuing to advance. So at the end of the day, when you're seeing these areas like financials, you're seeing areas like energy, broaden out. It's good to see increasing breadth across the broader marketplace from a longer term perspective, while you're seeing some of these names that were frothy pull back, right?
Absolutely.
Even some of those an indicator that I did want to hit on, even some of those stocks that did see such significant runs. The tech space was really the leader. It's number one scoring. It's almost number one sector in the Dolly sector rankings. But you look at like a relative strength positive for technology. So looking at the percentage of stocks that are on an RS buy signal against the market on their relative strength charts in the technology sector. So I know that's a lot of caveats, but it's looking at tech stocks on a relative strength buy signal on their respective RS charts. You're seeing that indicator sit at 40%. Right. When you're looking historically, when we see peaks in that period, you're looking at the 2000s, you got to 88%. When you're looking at 2003, you got to 74%. 2021, you got to 76%. We haven't even reached 50 yet on that. Right. So, even some of these other areas that, they might be frothy on straight price movement, absolute perspective, they still have more room to run on a relative strength perspective. We haven't seen that notable outperformance. It has been sharp, but it hasn't been sustained to really see okay, this is now an area that's had too much strength. Well, man, hold on a sec. Let's take a pause on that too. I guess something to kind of think about as we look toward as we head toward the end of the summer here, I guess.
Yeah, and that'll be keys in many ways right now. The confidence that we can hold is that many of the indicators are still high participation. While it's been downside action and obviously not all that far removed from 2022, it feels like any type of negative action is going to conjure up some sort of, oh no, here we go again type of feeling. It's not giving that. That's where we're conveying through this podcast, is that really at the moment the indicators aren't telling us that. We're seeing this exhale to the extent that we're finally getting opportunity, a breadth of opportunity. So at the moment, that's a positive as we wrap up our summer. But I believe that will do us for today's podcast. So
I think the market's just going to be taking a breath. It's really just depressed because Trevor's leaving us. Has to be that kind of the past week or so. Trevor, go back to school next week, right? And going kind of heading back down to where.
I got about a week until classes start up again.
Okay, and so when you're looking at after school, what are you looking to do after school? Are you looking to continue? Have we scared you away from the kind of asset management area of it? Or are you kind of looking to dive more into that?
Exact opposite, actually. Given such a great experience I've had here, and all the fun I've had doing kind of the equity research side here, definitely would love to do something more in kind of that realm or the asset management kind of space. So we'll see what the future holds for me. But
right, and we wish you the best of luck, certainly, and all your future endeavors. You've been great having us here, and thanks for hopping on. I think we asked you 5 minutes before the podcast you want to jump on here, so I think thanks for hopping on short notice here.
Sometimes it's gonna be a good crowd.
This is the true version of being thrown in the pool and learning how to swim. We like Ian said 5 minutes before, we said you want to come do a podcast.
Right. We do typically plan things out a little bit further in advance for those listening, but it was good to have you jump on here, Trevor.
Of course, it was my pleasure.
And David, good to be back sitting across from you in person here.
As always.
And to all listening, thank you very much for tuning in and joining us this week. And we'll be back to talk with you again next week.